we went over the characteristics, the bank, if it was a bank, credit union, or thrift, right? And since we don't really have the ability to break into groups, we just kind of did it as a group, right? So just going over other basics for advantages of using a financial institution. Some of them are you don't need a large amount of money to begin saving. We want to be aware of high fees charged by check cashing businesses to use their services. So if you use a check cashing service, a lot of people don't have bank accounts. And they go and they take their physical check and they go to a check cashing business and they get charged a percentage of their check to cash that check, right? So if you added up all that money over the year, you'd be giving a lot of your money away, right? So that's an advantage of keeping your money in the bank instead and having it direct deposit and things like that, right? You can open up an account with a financial institution and you'll establish, build, and improve your credit. Using a checking account to deposit your checks rather than cashing them at a check cashing company shows evidence to a lender that you have established a financial record and you can demonstrate responsible use of your accounts. Okay, so when we get ready to buy a car or we get ready to buy a house, you have that history there that the lender can see. Okay, and then you limit your risk of becoming a victim of cash advance company scams by conducting your financial transactions with a financial institution. Your money is protected and insured with the financial institution, and financial institutions provide many services such as wire transfers and cashing paychecks, right? Okay, so when we look at this slide here, we just talked about some of those basics, right? And so some of these terms that we want to define here are savings. So an account where you keep money for safekeeping or as an investment that earns interest. A mortgage. Who knows what a mortgage is? Anybody know what a mortgage is? No?
Jacob, you know what a mortgage is, Jacob?
No? Okay, so a mortgage is a document that is... Were you going to answer? No? Okay, a mortgage is a document that is signed by a borrower when a home loan is obtained and gives the lender the right to take possession of the property if the borrower fails to make the loan payments, okay? So it's a contract. Lenders, what are lenders? Anybody?
The
people who lend you
people like banks.
Okay, so more specifically?
Know that you have established a financial record and can demonstrate the responsible use of your accounts.
Okay.
I read it.
Okay, so lenders is the term used for a person or entity that is providing credit or a loan to a borrower, and they have specific terms and conditions. And the term lender can generally be used interchangeably with the term creditor. So they're pretty much the same thing, right? Okay. So here it says you can begin saving your money if it's a small amount. We talked about that. You can establish, build, and improve your credit. When you want to get a mortgage, car, student loans, it's generally a good idea to have established account. And what else? And we talked about the using a check cashing company, that there is no evidence to a lender that you have established a financial record and you may not be able to get a loan. So if you don't have a bank account, they're going to say, I don't know, this seems risky. Like there's no track record for this person or anything like that. So I'm not sure if I want to lend this person the money. Okay. Any questions on that? No? Okay. All right. So continuing with why you want to keep your money in a financial institution. So on the participant guide on page 13, so this is here, we're going to review the example below of the cost of using the check cashing services with you guys, okay? So can somebody read me the first one?
Can I do it?
Sure.
Okay, cashing and checking at a at a check cashing company. Wait, real quick. I think it kicked me out twice. I don't know if you guys saw it. Cause
No.
I think I have bad signal, but I'm a little closer to the router now.
Okay. So
But
you're
okay,
okay?
yeah, but it did kick me out. I don't know if you guys noticed.
No, I didn't.
Okay, well, okay, let me continue reading. Sorry.
Okay.
Angela uses a check cashing company to cash her checks. She cashes 4 checks a month and is charged $9 each time. That means she pays $36 a month. Um, and then it shows the 4 times 9. Or 432 a year. Uh, just just to cash her checks, just to cash her checks. She does not have the ability to write checks to pay her rent and utilities since she does not have a checking account at a local financial institution.
Okay, so if she can't write checks or anything like that, she would have to go get a money order. And sometimes institutions charge up to $7 to get a money order. So if you add that up every single month, that adds up too, right? So she's losing out on $432 a year using a check cashing company instead of having her money in an institution, right? Okay, who wants to read the second one?
May I?
Sure, Jacob, go ahead.
Cashing a check at a financial institution. Juan, on the other hand, cashes his checks by using an account at a financial institution that charges a monthly fee of $12, which includes 8 free checks per month and use of the automated teller machine ATM. Additionally, ordering a box of 100 checks costs him about $24. Since he purchases his checks through the financial institution, in this case, using a checking account for 1 year costs Juan $168. This equals a savings of $264 a year, 432 minus 168, as compared to Angela.
Well, that's a difference, right? Do you guys see the benefits of using a financial institution instead of a check cashing company?
Uh, yes.
Yes.
Okay. Okay, so moving on. Next slide. We'll be talking about how you can avoid becoming a victim of the cash advance scams by unscrupulous companies. Does anyone know what unscrupulous means?
They're not scrupulous.
Like they're not that known for?
It's
Like not that known for, I guess.
It's that they have no morals. They don't care how much they're going to charge you. They don't think about your bottom line or think about how they're hurting you. They're just trying to make as much money as possible off of
Unscrupulous sounds like someone who's really clean or something.
you. Okay. So, um, does anyone want to read the first paragraph? Somebody different? Okay. So you can avoid becoming the victim of cash advance scams by unscrupulous companies. For example, some check cashing businesses now offer their own types of loans. So they have small short-term loans that carry extremely high interest rates. And I'm not talking about 20% or 30%, which is very high already. I'm talking about 200 to 400% interest rates on these short-term loans. Yes, you get your money, but you end up spending 200 to 400 times the amount that your loan was worth.
Wait, are you reading it on the page?
No, that's my extra commentary.
Oh, okay. Sorry, I was like, what
Is
is
that
that?
even illegal?
Yeah, and a lot of states have rules against these types of companies, but a lot of states don't, and they prey on people that have less income. And so that they get in this revolving cycle of never being able to get out of debt and not having enough money to pay for their bills and things like that, right? Okay, so payday loans are so expensive that some states have prohibited these types of loans. That's what I just said. So you can take advantage of special programs offered by financial institutions that have begun offering low fee checking account options. And you guys are students, and if you go to college, um, you can get a free student checking account. So you don't get charged a monthly fee or a yearly fee or something like that, right? When you're a student. And others are, go ahead.
Is a student loan recommended?
You know, that's a question that you need to kind of think about how you're going to pay for that money. If you can avoid student loans in college, it's best to do that, because a lot of times you go to college and a lot of people use student loans to just survive, and to live off of. And then they end up with, $20,000 for 1 year and multiply that times 4 years, and they end up at $80,000 in debt. And those student loans, when you get your job, hit you hard. And you may not be able to afford a new car like you want because you're paying for student loans. And it is an issue of going to college, and how are you going to pay for college? And if you pay for them with student loans, are you going to be in so much debt when you get out of college? So it's better to go after grants, maybe a student worker job at the university, or
What's
something
that?
like that. I'm sorry?
A student worker job.
Yeah, like you would get like a part-time job with the college, and that can help you pay for your college.
Oh,
Yeah.
know that.
So, I mean, student loans aren't, I mean, they're not bad if you really want to get things done. But at the end of the day, it's better to get scholarships and stuff like that, because like my mom just finished paying her student loan off. And I mean, my mom's not old, but it's taken her about 20 years to pay off her student loans. 20 years. Okay. And then the interest rate just keeps going and going, and it like keeps increasing every time you're not able to pay that off. So like if there's any way you guys can get into grants or scholarships, and even the student worker, when I was in college, I had an athletic scholarship, but I was also trying to pay for everything else, like my living situations and stuff like that. So they allowed me to be a lifeguard on campus at their pool. So I was able to do student work and be able to pay off my room and board, stuff like that. So when you're thinking about college and student loans, don't think, oh, the only reason I can go to college is if I get a student loan. No, there's other avenues you can take to be able to pay that stuff off and not have 20 years after you graduate to have to pay off student loans.
Right. And then every time you refinance, if you need to refinance that loan, then there's more interest on that. Or if you get a deferment, which means they give you some time because you're having some kind of financial struggle or something else, and you can't pay for them, they add interest on the back of that loan. So it just keeps adding up and adding up, just like Maddie said. And I think the number one reason for people having bad credit and is defaulting on student loans, and that will severely hurt your credit score. So it's really important to look for different types of funding when you go to college. And and some people, they don't have the money, so that's what they end up doing, is getting student loans and stuff. And yes, it's probably a structural issue in the college systems and the student loans, and it needs to be restructured, but this is the structure that we live in now. So it's best to educate yourself and understand that before going into any type of student loan.
Yeah.
Okay.
Very proactive.
Yes.
Good question.
Okay, so where am I? Okay,
You good, Rock?
Yes. My question was answered.
Okay. So you and your money are better protected. When you leave the doors of a check cashing company, you risk being the victim of a crime because of the large amount of cash you may be carrying out of the store. When you exit from a financial institution, you take only the amount of cash you need to carry with you and leave the remaining amount safeguarded in your bank account. Okay, so yeah, you're going to cash your check and they're going to give you however much money your check is, right? So you're going to walk out with all of that. But if you have it in a bank, you don't have to take all that money. You have a debit card, that you can use, and maybe you just need a little bit of cash, or you get direct deposit and you don't even really have to worry about that. So there's a lot of advantages of that. Okay. And that happens a lot where people, and then even in our own community that are like immigrant communities and stuff like that, if they know that they don't have bank accounts and things like that, and they get robbed, and then maybe their status isn't right, and they end up, they won't report the crime. So they're victims of these type of things because they're not able to get these kind of financial institutions, get into these financial institutions and things like that. So there's like a number of problems that can happen from using check cashing companies and being a victim, okay? Becoming a victim. And then other thing is financial institutions provide other services such as wire transfers and cashing paychecks. We talked about that. And typically financial institutions offer these and other services at low cost than check cashing businesses. So we talked about the interest, not the interest, the percentage of your check that they take. They may take 2 to 5%, maybe even up to 10%, depending on where you go, right? And depending on how much your check is, they're really taking a big chunk of your money away from you that you worked hard for, that you deserve, and is your money. So just some terms to define interest rates. Interest rates are commonly thought of as the cost of borrowing money, and I'm reading this off of somewhere else. It's not on here, okay? Interest rates are commonly thought of as the cost of borrowing money. The interest rate is expressed as a percentage, and the amount of interest that is paid each year is determined by multiplying the amount of the loan by the percentage. So that interest rate, depending on how your credit score is for a car loan or a mortgage, that'll be more or less depending on your credit score. The higher your credit score is, the lower your interest rate is going to be. Okay, and then that also has to do with student loans. They have loans that are called unsubsidized loans and subsidized loans. So subsidized loans are usually directly through the government, and they're at a lower interest rate. And unsubsidized loans are like private lending companies, and they're usually at a higher rate as well. Okay, we talked about the payday loans. Payday loans, again, are short term, usually sometimes 2 weeks to a month of unsecured loans linked to a borrower's payday and past and current payroll. And the interest rates on these loans are very high. We already talked about that. A consumer usually pays a fee of $10 to $30 per $100 borrowed. A fee of $25 for every $100 is equal to the annual interest rate of 650% if the loan is paid on time. And that's just nuts. We should not be getting payday loans in whatsoever, okay? But people become desperate when they have to pay their electric bill and things like that, and they prey on that type, on people that are low income or have an emergency and stuff like that. But since you guys are learning about this and you know that this is not a good option for you, and it's only going to cause more trouble for you, and you're going to become in this revolving cycle, okay? And then wire transfers is a method of electronically transferring money from one financial institution to another, so like a direct deposit. It's particularly important way of transferring funds to relatives who live in another country. The fees charged by financial institutions to wire money to countries outside of the United States are usually less expensive than check cashing businesses. Okay, so direct deposits, then you have like companies like Cash App, Apple Pay, you have Zelle that the banks set up and stuff, and those are all examples of wire transfers. Okay.
What are shark loans, or I forgot what they're called?
Shark loans, I think that would be along the lines of like a payday loan.
Oh, okay. Because that sounded like.
Yeah, and then guys, one more thing about the credit score. Okay, so I didn't know this until I had graduated college, but my mom had, when I was I was a little bit in college when I found out, she had applied for a credit card for me. I had no idea about it when I was 16 years old, and she put all my information on it, and she used that credit card herself. I never got to use it. So rude. But she built my credit from when I was 16 till I was in college and able to take over my finances myself. So being proactive like that, like maybe you guys can talk to your parents about, hey, parents, how do I build my credit score right now? Because once you get to be my age, you're going to be wanting to build your house or get a car and stuff like that. So when they look at your credit score and it's like super duper high, then they'll be like, okay, she's responsible or he's responsible enough so that the interest rate gets lower and you're able to make a lower payment and pay off your whatever you bought before the interest rate goes up.
Would it be better on the car thing? Would it be better if you had an old car and just use that one instead of buying a new car? Or what would be recommended, or it's up to me, or what?
I would just say it's up to your preference.
And what you can afford.
Yeah, what you can. Yeah.
Because you're not going to want to
if you're able,
your means.
Yeah. But like if you're able to build your credit score like now during your teenage year, I'm not saying go apply for credit cards. Okay, that's not at all what I'm saying. Don't do it. But maybe like figure out a way how to build your credit score up and start being proactive now.
Yeah, and Maddie's mom is a responsible mother on credit and things like that. A lot of times, sometimes, I mean, I've seen where family members ruin their kids' credit before they even have a chance, and I've seen that a lot. I see that on the reservation where I live. I've had, just people that I know that have done that. So it's good for you to know this already. That's an option, but it's also, Maddie's mom is more responsible and is able to pay the payments and stuff. And she did a good thing for Maddie, but not all parents have that information or have that knowledge in order to do that as well. So, and in some of the future modules, we'll be talking about ways to build up your credit. So you'll have examples of that. Okay. So we have a knowledge check here. You guys see that on your screen?
Yes, ma'am.
Okay. So of the items listed below, which do you think represents reasons why you should keep your money in a financial institution? Check all that apply. So what do you guys think?
Well, for one, I think safety.
I would select all.
Safety, that's what I prefer.
Safety. Okay. What else?
Convenience.
Convenience. What else?
Interest-free loans.
Are they usually interest-free loans, or is the bank always trying to make a little bit of money?
That's true.
Because usually, you have to have a very, very high credit score to get an interest-free loan.
Oh, okay. Well then,
like for example, my stepfather, he has a 820 credit score, and so when he got a car recently, he got it at 0% interest. But that is the exception to the rule. Okay. What else do you guys think?
Then I guess I'll change it to convenience.
Okay. What else, guys?
Financial future.
Financial future, Rain. Okay.
Also.
Cost.
What else? Cost, yes. And what else?
Security.
Yes. So everyone except for really interest-free loans applies here, right? On why you should keep your money in a financial institution. There are probably opportunities to get an interest-free loan, but that's usually not the case. Okay, you would, like I said, you would have to have a extremely good credit score, almost perfect credit score for you to be able to get an interest-free loan. And you would probably need to be a customer for a long time with that financial institution in order to get that as well. Okay, so next one, another self-check. Maddie, you want to do this? No? Okay. True or false? Using a check cashing business is safer and less expensive than a checking account. Star.
False.
False.
Oh, I'm sorry.
What's your answer?
Using a checking. True.
It's safer?
Wait, I'm sorry. Oh, wait, sorry, no, false.
False, right, right. For all the reasons that we talked about, right? And 650% interest on a payday loan, or on the example from Angela a few slides back, that it's 400 and something dollars a year when that adds up, right?
Yes.
Okay, so just remember that check cashing businesses charge extremely high fees to use their services, and using a financial institution is usually less expensive than using a check cashing business to cash a check, okay? So let's talk about opening an account. Who has okay, I know a lot of you have a checking account or a savings account. Who doesn't?
Me.
Who's me?
Robert.
Robert? Okay. But Kira has one, no?
Yes, I
Yeah.
do.
Okay.
Wow, there you go, girl. Come on, Robert.
I don't have enough money to open an account.
You just need to go down there, right?
Yeah.
Okay. Okay, so that's
Keeping
something
it
that
under your bed? You keep all the cash money under your bed or what?
don't tell her where you hide it. Never tell anybody where you hide your money.
That's the best financial institution.
Under your bed.
Under mattress.
That's true.
So hopefully, Robert, we're working towards a goal of you opening an account and establishing your credit history and things like that. I'm hoping that you understand why that's important, okay?
Yeah, okay.
Okay, so this next topic discusses opening an account with a financial institution. And so some of the basics that I'm going to go through, I'm not going to read this word for word, but I'm going to tell you some of the basics. So when you first open up an account, the financial institution will review your history of using banking accounts, okay? If you don't have a history, then you don't have a history. But sometimes a bank will not accept you, maybe if you have a really horrible record of just, racking up all these overdraft fees and just, owing money to other institutions and things like that, kind of bank hopping or something like that, okay? So some financial institutions will review your credit report before you can open up an account. You may not be able to open up an account if you have a history of misusing accounts, like frequently bouncing checks. Do you guys know what that means?
Yes.
What does it mean?
It means that when you give someone a check, but there's no money in the bank, like where the check is gonna be, like, yeah, like that, right?
Yeah, it's going to be returned, right?
Right,
And
because there's
that
no money in it.
right, that business or wherever you try to get goods or services from is not going to get their money, right? Because the bank, you don't have any money to pay them.
And don't
So-
they charge Andy, don't they charge the business a fee if they like get a hot check or something like that?
Sometimes I think it depends what the financial institution is, but
What's that?
what's what?
A hot check. What's that?
It's the same thing. A bouncing checks. That's the same thing.
Oh, okay.
I was gonna say something else now. I don't remember. Frequently bouncing
They
checks.
give you some kind of reprimand though. I know that.
Yeah,
Because,
you actually can go to jail for that. You can get charged and go to jail for bouncing checks. Okay.
I know someone who's done that.
Yeah. So not a good example to follow. Okay.
No. Like no one in my family, just someone.
No, well,
yeah,
I'm just saying if you don't want to go
definitely don't follow their trend.
there. Okay, you will need a government or state issued ID to open up an account with a financial institution. Do you guys all have IDs?
Yes.
Yes, most of you? You can get that
I
at
need
the.
one.
No, I don't have one.
An
Okay.
ID? No.
Okay, so maybe that's something that you guys want to go to the Texas Department of Transportation. You can get an ID, and it's a state issued ID, and then you can open up an account with a financial institution. And then also, if you're going to be doing business with the institution, they want to make sure that it's you taking out money. They're not just going to give it to anybody, so you have to provide that every time that you go get money out or something like that. The ATM, not so much, but you have to enter a PIN. But if you go inside the bank or through the drive-through and you're talking to a teller, they're going to ask for your ID always. And that's just to protect you as well.
I know my
and your
bank,
money.
I bank through Wells Fargo, and they have to have two kinds of identification for me. So I have to give them my debit card and my ID to be able to withdraw money from my account.
Right. And that's just an extra protection that the bank does. Did somebody have a question?
Not really a question. Dang it, I forgot. I was gonna say something, and never mind. I'll try to remember it.
Okay, let me know when you
I think it
remember.
was a question.
Okay, so most financial institutions require a minimum deposit amount to open up an account, especially like with a savings, probably at least $25 to $50 to open up a savings account, and you have to keep a certain amount in your account, okay? Or you'll get an alert. You usually get an alert, or if you'll get an overdraft fee or something like that. A lot of banks will give you like a day or two to deposit money in there if you've gone over, but then after that they're going to charge you an overdraft fee, which is usually around $20 to $40. What else? Okay, if you have more than one account with the same financial institution, you need to be sure to ask them about convenient ways to transfer funds between accounts. And then many financial institutions offer online banking, okay? So, and even apps, okay? So you can even cash your checks through there. Take a picture of the check and get it and deposit it. Okay, it might take a couple more days because the process is a little bit longer, but you can do that. Once your checking or savings account is open, you'll probably have many options for how to make deposits and withdrawals. Okay, so for you guys who have a checking or savings account with a financial institutions, what are some of the reasons why you should open up a checking or savings account?
So hold on, Brock. So do you have a checkings account, Sol?
I think he's on mute.
My bad. It's because I have my mic actually not like the laptop thing. So I have to like press the button on my headphones every time. So I'm not sure. I think so, but I'm not sure.
Okay, so you think that you can have one?
Well, I'm not really sure.
Are you on the Mattress Institute like Robert?
Come on, bro. You gotta be part of the trend.
I think I do have a checkings account. I think I do. No, Soul uses
Yeah. What, Robert? Since you and Soul don't have a checkings account, what do you think are some good reasons why you should have one?
I don't get my money stolen.
Yeah, better security.
Right.
I know where to go when I go to Robert's house.
So Kira, what has been what has been a convenience for you for the checking or savings account that you have?
Well, I guess I spend my money less carelessly.
Uh-huh. Why?
But I take it out like every few days, so not really.
Okay. Does your bank, some banks have where you can only take so much money out a day, and then also only make so many withdrawals a month?
I just remember what I was gonna say.
Go ahead.
My mom had this account that she made, and she hadn't withdrawals from it for a long time, and then she withdraws from it. It was linked to a credit card, and she withdraws from it, and the company actually the financial institution or bank actually, I guess, canceled or denied, or I don't forget what it's called, where the credit card doesn't work. They turned it off.
Deactivated it.
Yeah, they deactivated it and then they sent my mom a message, and they said that somebody has been using your account, and they saw suspicious activity when it was just because she hasn't withdrawn and she did it the one time.
Yeah. So what does that go back to? security, right? So they saw that the account was inactive and that nobody was using it. So once your mom did that withdrawal purchase, it sent them a red flag automatically, and so they didn't allow her to do the purchase because it hadn't been used in a very long time. And that just goes back to security. They were just making sure, like, oh, let's see who was using this card since it hasn't been used in such a long time.
But there's also like some disadvantages of having it because you can get hacked pretty easily. I mean, I think that's like a disadvantage from it.
Absolutely, that's a huge disadvantage, and that's probably that's going to be an ongoing disadvantage for a long time because there's people like that are can hack into banks and into accounts, but then you have also insurances from the banks, like they're insured, like if you get robbed, you get a certain amount of your money back, or like you get all of it back, you get reimbursement. So you'll not necessarily lose all your money, but yes, you do run the risk of getting hacked or somebody robbing the bank, but there's always insurances behind all of that. Right, Andy?
Yeah, if you're FDIC, if you're an FDIC insured banking institution, then they have fraud protection laws and things like that. So they would open up a fraud case. Okay, so I have an example. Somebody rented a hotel room on my card once. I don't know how they got my account information, but they were able to rent a hotel room. So I called my bank and I reported that fraud. Then those people get on it and they go to recover the money for the bank actually, because I reported the fraud and they actually credited my account back that charge. Okay. Immediately, but not all banks will do that for you immediately, but my bank did, and then they go after whoever did that, and they have tons of lawyers and all kinds of all kinds of people and fraud recovery type people that they have at their disposal, and trust me, they're going to get their money back.
Okay.
So they have those built-in security.
Yeah, and think about it. Your mattress institute, right? What if somebody goes in there and takes your money? What kind of insurance do you have there?
Per se, Brock.
Bodyguards.
Per se, Brock. I'm pretty seeky.
So like, that's why it's super safe. Yeah, good questions. Good point there, Rob.
Like my mom got her account got hacked, and someone went into a jewelry store in France and spent a lot of money. But she said that she got backed up because she had insurance.
Exactly. There you go. Good job, guys.
Okay, so just one term to define. I think we've talked about this like maybe in the first module, but just to review it again, a credit report provides a history of the use of credit. Specifically, it's file maintained by a credit reporting agency that contains information about a person, such as where the individual works and lives, information reported to the credit reporting agency by creditors regarding money borrowed and payments made, and the public record information such as whether the person has filed for bankruptcy. Okay, so all of those things are going to show up on your credit report. So I've changed the slide and we're looking at this. Can you guys see the checklist of choosing an account? It's kind of blurry, huh? Let me try and zoom in a little bit. So we're going to do this as a class, and I think Maddie's going to go through this one. Yes?
Yes.
Okay, so you go ahead.
It's because
I can't see.
You can't see it at all?
Oh. Okay,
like
now
it's
I can
too
see
blurry or
too zoomed in.
Too zoomed
blurry.
in?
Wait. Am I only supposed to see the square of the choosing an account?
Yeah, I moved it over so you guys can see it. Can you guys read it?
Yeah, I can read it.
I can't see it, ma'am. It's blurry.
It's blurry? Okay, let's see.
I can kind of read the blurriness, but
that's too small.
If you can make it better, it's fine. No, it's not. Yeah, it's not too small. It's just kind of blurry.
Okay, I think that's about as good as it's gonna get. Let me try 125. If it's not any better, is that better or worse?
I can't see
Oh,
anything.
Okay, well,
that's
I think Maddie will read through them, so.
Yeah,
the way
mine's
you had it
blurred too.
before was good.
The
What
one
page is
before it,
that for the
100%?
kids?
Well, the one you had before you zoomed out completely.
This one? Or zoom in?
I think it says zoom in.
And then also, you guys should have the slides open on your end too.
Let me try to open mine.
Okay, well, we'll just start. The first one, Andy, is that's page okay. You guys ready?
Page 18 on you guys, 31 for instructor manual, Maddie.
Yeah, I have the instructor manual. It's just because I can't see it. I can't see the words.
Okay, I can read them if you want.
Oh, I got it. All right, so these are the types of accounts. I need to open this account. All right, so we're gonna go through, where's Institute A and Institute B, Institute C?
So it's just if you're deciding between a bank, 3 different banks, you usually want to have 3 different banks to choose from, right? And then you're gonna ask these questions. So go ahead, man. So it could be any financial A, B, or C. Remember the checklist that we did last week, and we talked about one was one was a credit union, one was like Freddie Mac or Sally Mae, and then the other one was like Wells Fargo or something, right? So you guys can decide whichever one financial A, B, and C is, but Maddie's gonna go through the checklist.
So they have to figure out how much money they need to open the account, right, Andy?
Right. So
and all that stuff.
You want to ask when you're choosing a financial institution, you want to use this checklist to see how much money do I need to open up the account for financial institution A, B, or C, and then you guys make a decision based off of this this checklist. So these are all good questions to ask. So we want to just go through the questions.
How much money do you need to open the account? The accounts that you have chosen, how much money do you think that the account will cost to open? How much do I have to keep in my account to avoid fees? There's always like a monthly standard as to how much you have to, or a yearly standard of how much you have to have in that account. So that's an important thing. So if it's like $100 that you have to keep in the account, you got to be able to think, am I going to make it to the end of the month to where I at least have $100 in my account? Okay. How much do I have to keep in my account to avoid fees? What are the fees for bounce checks? Just like those hot checks, if that happens to you, you need to figure out how much it's going to cost you to, how much the bank is going to charge you for that fee. Okay. How many checks can I write before the extra fees are charged? I don't mess with checks. I do strictly online and I do ATM. How many withdrawals can I make each month? A bunch of banks from ATMs, or even if you do drive-through, they give you like a certain limit as to what you can withdraw. But I know a lot of banks, if you do a walk-in bank, you could take a lot more money out. Does this account pay interest? Do they charge you interest on all the, I know if you apply for a credit card, there is an interest rate. I'm not sure about, definitely not for a checkings account. They don't charge you interest rate through a bank. Does an ATM or debit card come with this account? Will I be charged to use the ATM or debit card at the financial institute? So a lot of the banks and ATMs, they, you know how there's different ATMs all over the place in the stores and convenience stores and stuff like that. If your bank is not linked to that ATM, they give you like a $3 fee. The fees are really, really high sometimes on those. So you need to figure out, okay, does my financial institute charge me to go to this certain ATM, or does it charge me to do this and this and that with ATMs and my debit card? What is my liability if I lose my ATM or debit card? You lose your debit card, how long does it take for them to send you a new one? Do they charge you a fee every time they send you a new one? Are there any other fees? So are there any back-end fees, such as if you purchase from a specific store, like do they charge you then and stuff like that? So those are things that you have to look for. Does a financial institution offer a service for overdraft protection? So these are a lot of the main questions that you're going to have to be asking yourself when you apply for an account, or you're getting a checkings account or a credit card. These are the main questions. And I think when I first got my checking account, I was worried about how much money I had to keep in the account, because I was about your age when I got my first checking account. And I mean, I was living, I was like you, Kiara. I was like just getting money out whenever I wanted. So I really paid attention to how much you have to have an account every single month and the fee that came with it. And as I got older and I got a stable job and I was able to do all that stuff, I really didn't pay attention to that. Now I pay attention to the ATM fees and the interest rate that the bank is charging me. Any questions?
I have when I would take like money out, like at Walmart, they would charge you like almost $4.
Yeah. So it adds up, right?
Mm-hmm.
So that last question, does a financial institution offer a service for overdraft protection? That's something like if you have a checking account and a savings account and you have both with the bank, you can link your savings account to your checking account. And if your checking account falls below a certain amount, you can automatically transfer a little bit of money, or however amount of money that you set up with the bank, to transfer over, so that you don't end up with an overdraft fee, and that the amount of money that you need to keep in your account to not get an overdraft fee is there. So that may be important for you if you're, because back in the day when you had a checkbook, there was a way that you would balance your checkbook, and you would write down all of your fees and credits and withdrawals and things like that. And so you were able to see where your account is. Of course, you can do that on an app and you can see where you're at. But a lot of times, sometimes you'll make a charge and it doesn't post right away. So you think, oh, I have $365, but that post hasn't credited, and you keep spending money, and you're spending over what you have because that hasn't credited. So it's good to be aware of what charges you're making, what withdrawals, and making sure, like, okay, looking at the charges and the credits and withdrawals, and making sure, okay, you know what, this one hasn't posted yet. So it shows that I have $365, but really I spent $50 over here at H&M, and and it hasn't posted yet. So I need to be aware that I only have $15, right? So that's just something to be thinking about.
And as a student, if you're under the age of 24, or I mean, if you're older and you're in grad school, some banks have like what can I say, like programs for students where they don't charge maintenance fee or minimum fee of the bank and stuff like that. So if you're enrolled in school, some banks, most of the banks have all those cool little extra stuff for students, so they can open their checking account and they're not so stressed. But that's only they make sure that you're enrolled in school, like going through your email or then getting your transcripts and stuff. That's what I did when I was in college. I made sure that my bank knew that I was in college, and so they wouldn't charge me no monthly fees, or I didn't have to pay no minimum. I just was able to just open a checkings account or a savings account and save all my money there. So that's very important to when you get a new account, is to make sure that you're telling, oh, well, I'm a student or I'm this, so they're able to open up certain programs for you.
It's sideways.
What sideways?
The
Yeah, I
The
know.
chart, it's
I moved it because I'm gonna show you some examples, but the other one was this one was sideways, so I moved it so you guys can see it, okay? So we went through that checklist, and then here are some examples for just examples of mock financial institutions A, B, and C, okay? So let me just go back one. So when we talk about the descriptions for what's the type of account. So they have different types of accounts. So they have this simple account, they have a convenience account, they have the 60 plus account, they have student account, they have premier account, and all of these have different descriptions and benefits, okay? So a simple account for this financial institution would be, they have a base checking account. It's perfect if you write checks, you use the ATMs and want online and mobile banking, direct deposit, and a debit card, right? But they have the benefits also for this one are low and predictable monthly maintenance fee, no minimum balance required. So that may be a type of account that you want. Then they have one called convenience account, and they have those types of benefits as well. Core personal checking account, straightforward, easy to use, ideal for everyday banking, okay? You can enjoy the benefits of hassle-free banking, and they have a low minimum balance requirement of $100 to waive monthly maintenance fee. So as long as you keep in this type of account, as long as you keep $100 in your account, you do not have to pay a monthly maintenance fee. But if you don't keep that amount, then they're going to charge you a maintenance fee. Okay, because they're trying to encourage you to keep a certain amount of money, because the more money they have in their bank, the better it is for their institution. Okay. They have the 60 plus, none of you are over 60, but this could be for somebody like your grandma or somebody like that. They have the student accounts. I'm not going to go through every single one of them. You guys have it inside your copy. So I suggest you guys look at this, okay? Student, it's under, but let's just say this one, if it's under the age of 24, you're enrolled as a full-time student. Sometimes that age requirement isn't there. If you're still a student, you can prove that you're a student like Maddie was talking about, then you can probably still get this. But for this particular institution, you have to be 24 and enrolled as a full-time student. And then there's all these benefits right here of that, okay? And then Premier is, for people that keep a higher balance and maximize the interest that they earn, okay? So the fees are waived regardless of the balance. For non-TD fees reimbursed when a minimum daily balance is at least $2,500. They have tiered interest rates that increase with account balance. They maintain the minimum balance of $2,500 to waive $25 maintenance fee, monthly maintenance fee. And then they give you checks for free, your first order, you get free money orders, things like that, okay? So this one, notation. Okay, so here's the one for B, okay? It's kind of talking about that. These are the basic regular gold and student accounts. It goes for all why they're good for you, why, what would be the benefits of those. And then they talk about the monthly fees, if you're at a non-ATM bank, how much it's going to be, how to avoid monthly fees. Are you calling me, Maddie?
Oh, no, it's because I couldn't, you didn't scroll down, but it's there.
Okay. And then this one has the monthly service fees and how to avoid those monthly fees, okay? So moving on. And it didn't go into the C, but it showed you a couple examples from financial A and B, okay? So those are just kind of things that you guys can talk about, that you guys can think about. Okay, so when we're moving to banking services, additional banking services, these are all services that are important, right? When you're looking for a financial institution. Ow, I just hit my knee really bad. Okay. Okay.
Miss?
Do you have a question?
No, I was just asking if you were okay.
God, kind of. I almost muted it.
Well,
Okay, so this topic
what
discusses.
page is this?
This is page 23 on your manual.
Okay, how many pages are there? I'm just. Oh, I see it. I see it. No, I see it.
Nice, at the top.
I'm sorry.
Okay.
Yeah, I see it. I see it. Top.
Okay. So we're gonna probably do about 10 more minutes, and then I'm probably gonna end class for the day. Okay. So
Okay.
this topic discusses additional services offered by financial institutions, and we want to discuss the additional banking services below. So automated teller machine ATM. What do you guys? What's that? Did you know that's what ATM stood for?
No, I just. I have to be honest. No, I didn't know.
Dang, I didn't know that either, honestly. I just thought the name was ATM. What?
Okay, so automated teller machine, right? So an automated teller machine, or ATM, is a machine you can use 24 hours a day to make deposits, withdrawals, and transfer money. So
it's like a teller, right? It does what a teller does. It does what a teller does.
Basically, there's some services that a teller can provide you with that an ATM can't, and some ATMs, you can only make withdrawals. You might not be able to make deposits on there or cash a check through there. It just depends what your bank services offer. Okay. Unlike a check cashing company, the financial institution doesn't have to be open for you to use an ATM. There are literally dozens of ATMs in any given neighborhood or community. And when you use an ATM, you use a card issued by the financial institution and a personal identification number. Or what's a personal identification number? What's the shorthand for that? Your PIN? Okay. So who said PIN?
Me.
No, I just agreed with you. Oh, he said PIN. I didn't hear anything.
Who said PIN?
I didn't hear anything at all.
Me.
Jacob.
Okay, I didn't hear. Okay, thank you, Jacob. The PIN.
Yes, Jacob.
Several people were talking at the
Okay,
same time, so
Drake.
I couldn't tell who said it. The PIN is used for security purposes, so no one else can access your account. So what do we want to know about our PIN? We don't want to give our PIN out, right?
Right.
We want to keep our PIN to ourselves.
Right.
Okay.
Guys, I've had the same PIN since I was 16.
What is it?
What is it?
I can't tell you, it's a secret.
Tell me the PIN. I'll hack your account secretly.
So some financial institutions may charge usage fees for the use of their ATMs, okay? Usually if you use the bank's ATM, they're not going to charge you. But like Maddie said earlier, if you go to a convenience store or you go to another bank's ATM, you can pull out money, but it's probably going to be a fee, okay? And then you have a debit card. What's a debit card, guys? Anybody?
A debit card is money you put in, right? You put in the money and you can spend the money you put in.
Well, it's a means to spend your money, but anybody else?
Is that what it is?
Hold on. Let's see if somebody else has an answer.
Okay.
I heard somebody about to answer.
For the debit card, miss?
Uh-huh. Does anybody know what a debit card is? What is it? What's another word for a debit card?
A credit card?
Not exactly, because a debit card is credit and it's a line of credit, right? I mean, a credit card is a line of credit, right? A debit card is linked to your actual account and your actual money. So you're spending your own money, not spending a line of credit that you're going to have to pay back later, right?
Oh, okay.
Okay, so there's a difference between that. So a debit card is a plastic card, sometimes called a check card. Have you guys heard that? So that's what kind of replaced checks, right? People started using debit cards, okay? And it was linked to their accounts. So not as many people use checks as much, right? So it usually has the name of your financial institution printed on it, and the card allows you to pay for goods and services in stores or online at merchants that accept these cards, but is not a credit card, okay? When you see a debit card, the money comes directly out of your bank account and reduces your account balance. The debit card also functions as an ATM card. Okay, what's a direct deposit? Let me ask specifically somebody. Sol.
Oh, okay.
Are you there, Sol?
Yeah, sorry, the whole mic thing again. So yeah, what?
A direct deposit. Do you know what a direct deposit is?
Let me see. Let me think.
You can always pass.
No, I'm not
No.
passing. I'm not
Why do you
passing.
give them?
Okay,
Wait,
Dominic.
why do you
Outland.
Oh.
Dominic.
I feel.
Dominic.
Me?
What's a direct deposit? Do you know?
When an employer directly deposits your money.
Okay. It could be your paycheck or a benefit check. Say you're a senior citizen and you get a social security check. Something like that, right? So with direct deposit, your paycheck or your benefit check is electronically transferred and directly deposited into your bank account. The amount of money deposited is available immediately. Okay. So then we have stuff. We have the loans. So we've talked about loans. Somebody tell me what a loan is.
I have a question. For a safe deposit box, I don't know. I don't know if you went over it, but what is that exactly?
I'm gonna go over that. I'm gonna go over that right now. We're gonna go in order.
Okay.
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 Do you know what a loan is?
Me?
Yeah.
Yes.
Okay. What is it?
You ask a bank. Oh, you ask a bank. I'm gonna use a bank.
Okay.
You ask a bank for money, and they give you it. I mean, like, there's more steps. Like, they have to approve your report. Sorry, they have to approve your credit report, and then they have to do other steps, right? And then after they've approved you and you have the good credit, then they give you a loan.
But what's an important step after that?
Your credit history?
No.
I don't know.
You have to pay it back, right? You have to pay it back later.
Yeah.
You don't just get the money. It's not just yours, right? And usually it's they charge you a fee and interest to borrow the money, right? Okay.
Right.
Okay. So then a money order. Does anybody know what a money order is? I know it's kind of hard sometimes when we're like, you think about checks, like who uses checks anymore or stuff like that. But a lot of people still do use checks, and checks are actually.
I've seen my parents use checks.
They don't even keep the checks anymore. A lot of places, like if you use a check at Walmart or Albertsons or wherever you shop, they'll put it through the machine and it'll scan it, and then it goes into the system. But they give you your check back. They don't even keep it anymore. So everything has become digital. So a money order is similar to a check. A money order is used to pay bills or make purchases when cash is not accepted. And usually you pay a fee to get a money order, so shop around for the best price. Remember to keep copies of the money order receipts used to pay bills for at least 12 months. And this is important if you have not established a credit history and you go to apply for a mortgage. The receipts can serve as documentation on how you pay your rent and other bills. Okay? So Robert, since you don't have a checking account, but you have some bills, maybe you bought an ATV, right? And you pay it every month. You bought it from a neighbor, right? And they allow you to make payments on it. Okay? And you pay him with a money order, and you keep that little part on the money order that's on the side that says how much it is and when you paid it, right? And you would keep those for 12 months. So when you actually go and open up an account, you're able to use those receipts as a history and documentation that you pay either your bills, or if you're paying rent. Maybe your parents are going to start charging you room and board, okay? Because you got a job, and when you turn 16 and they're like, hey man, you got to pay a bill here. There's no free rides, right?
Yeah. On that subject, is it recommended to live with your parents until you're like financially set, or after because I want to get my basics in college here, but is it recommended to live at my parents for like financial reasons, or is it like up to me again?
I mean, that depends if your parents want to let you live there. Right?
No, no, no.
Like,
They
we're
offered.
kicking you out.
If your parents are allowing you to go to school and save on other costs that you would have because of an apartment, of utilities, things like that, then you're pretty lucky, right? Because
Right.
sometimes somebody has to help the family. People have to help their family and they have to go to work. And sometimes they can't even go to college or go to school. So if you have parents that are allowing you to live at their house, rent free, or maybe you just help with one bill, then of course that's a better situation. You're not going to have
Right.
those bills, but you also have to keep up your end of the bargain, because they're allowing you to do that, right? If after you turn 18, right? Because they really
Mhm.
don't have to take care of you after you're 18. And some parents
Right.
will
They're
say,
like,
hey, oh, I've done my part, go out into the world, you know? But luckily here, like our community and how we are, usually people stay living with their parents a little bit longer. And there's a lot of like intergenerational families, like you have everywhere from anyone from your grandma, the parents, and the kids all living under one household sometimes, right? Okay,
right.
moving on, because I don't want to keep you guys on here too long. Okay, so online banking. So online banking is a bank service that allows you to make payments, check account balances, transfer money between accounts, obtain account history, stop payments on a check, and obtain general bank information at a time from any computer with internet access. One thing that it did, oh, the payments, yeah. So you have bill pay, right? You can set up your bill pay. You can link your accounts, and it'll send a check to that institution. Say you're paying your gas bill, you can link your accounts and everything onto the online banking, and you can set up your payments. You can even set them up automatically to send. Okay, so that's a real convenience. And then, okay, safe deposit boxes. That's what we talked about, right? You wanted to know about. So a safe deposit box is a fireproof locked box, which is available in various sizes for a yearly rental fee. It provides you with a secure compartment within the bank's vault for the storage of valuables such as passports, important documents, jewelry, etc. The keys remain solely under the client's control. Okay, so usually they have two keys. So you have a key, you would have to be able to get that key. And sometimes they have a master bank key, right? So they would have to open it up at the same time. But that box cannot open up without your key, right? So people keep diamonds, jewelry, all kinds of stuff in there. And that's a way to keep all of your stuff safe, that you don't want to keep in the house because maybe you might get robbed.
Is it,
If you have a fire, all of that stuff is protected.
wait, I've seen those. Is it in the movies where they're like a bunch of little squares in a bank? Those
Yes,
safe deposit boxes?
yes, that's exactly what a
Ah,
safe deposit box is. Okay, and to keep
okay.
documents, maybe you have something from your great grandmother, some kind of document or something, and you want to make sure that it's safe, right? That box is fireproof, so if there's ever a fire at the bank and stuff, it usually will be saved because of the way that the box is made. Okay, telephone banking. I only have two more. Telephone banking. Telephone banking allows you to use the telephone to check your account balances, transfer money between accounts, check on recent deposits or withdrawals, and stop payment on a check. So some of us that are older, like me, I used to call and check on my account balance using the telephone because they didn't have apps. They didn't have all that online banking when I started first getting a bank account. So now you guys have all the perks of technology and things like that, and you really don't have to use that, but that is still available for some people that don't maybe feel comfortable with technology either, that maybe are senior citizens and they'd rather call on the phone and
Technology's bad.
so, okay, and then the last term, wire transfer. So wire transfer is a method of electronically transferring money from one financial institution to another. It's particularly important. It's a particularly important way of transferring funds to relatives who live in another country. And the fees charged by financial institutions to wire money to countries outside of the United States are usually less expensive than check cashing businesses. Okay, so you hear about Western Union and things like that. Like sometimes you can set that up at Walmart and transfer money. Nowadays, they have apps to do that from Western Union and things like
Do
that.
wire transfers? Sorry. Do wire transfers require a fee, like an interest rate or?
Usually there is a fee associated with a wire transfer, but if you do it through a financial institution and you have already an established relationship and they have certain requirements, it's usually going to be a lot less than it is to go to, say, Western Union or MoneyGram or something like that.
Okay.
Okay, so I think we're module conclusion. Okay, so congratulations, you have completed the banking services, an important step module for the Credit Smart online training program. Some of the key points are, financial institutions are less expensive to use and offer more services than check cashing companies. We want to keep you out of those check cashing companies, okay? And also a financial institution offers more and better services and provides more security for you and your money. So finally, building a relationship with a financial institution can help you establish a record of paying your bills, save money, obtain credit, and get a mortgage of any type of loan. Okay? Do you guys have questions?
No.
No? Okay, so you guys know that your homework, a lot of you need to revise. I think Star and...
Could you repeat that?
Star and Dominic, I think, you guys, so the only ones that don't need to revise are Sol, Jacob, and Brock. I looked at yours and yours are all okay. Star and Dominic, I think you're just missing one on there. Okay? So just add the one that you're missing because I think only one of them has only one job. I don't remember what it's called. There was job titles and then job requirements. I think it was the requirements. So on one of your job titles, you have one letter. So you just need to add the other one. So that's all the revision is. And then just make sure that, Dom, that you upload it as well, okay? Because I didn't get it. I didn't get yours uploaded, so I'm not sure. And then the rest of you, Robert, I didn't get one from you, so.
Yeah, me and Sol did ours together.
Okay, so just whatever, if you have that from Sol, then you just make sure to upload the same document on yours.
See, I was going to do that, but I don't have an email, so.
Can you use the one that's your mom's?
Yeah, I'll try, yeah.
Okay, because she's actually on the class.
Oh, okay.
That email, so you can go with email. I think I even have you set up as that.
Okay.
So you can upload it from there. What else? Does anybody have any other questions on the homework?
So what about for the ones who did it?
So the ones that did
homework?
it, since we continued on to our module for 2 weeks, if you've already done it, you're good to go. You don't have any homework this week. Okay. Right. And then next week we'll start the next module, which will be, let me stop sharing my screen. I'm going to stop sharing. Okay. So, so the next module next week will be establishing and maintaining good credit. So we'll talk about the things that you need to do to start getting your credit rolling, okay? All right.